Success is about doing the right thing, not about doing everything right. Gary Keller. Well, I did not do the right thing yesterday. Guess who forgot? Who forgot that it was Good Friday and markets are always closed on Good Friday? My friends, I have been traveling too much during this coronavirus outbreak, trying to be with families, family members, and all. I was traveling yesterday. I do not know what in the world I was thinking. I've never missed a market and called a day not knowing the market wasn't going to be open the next day. I apologize. I will blame it on the coronavirus and everything that's going on, and I apologize. Let's go over the charts again, and I will add some good things in for you, and we will talk about how the week ended on Thursday. It's going to be opening right at the right time at 9:30 on Monday morning, Eastern Daylight Time, but it is not open. It is not open on Friday, and I apologize for putting out an entire recording as if it were. Please allow me that one mistake. It's the only time I've ever done that. So I will take that hit. Let's jump into these charts. What did we see going on as the market wrapped up? And we'll take a big time view of what went on. We see the S&P 500 ending the week up 1.52%. We have a big green up candle for the end of the week. It's the first open box up candle we have seen in many, many weeks. Price percent oscillator heading up, derivative oscillator losing downward momentum. Overall mood is still negative. The bull trap is being set. If you don't know what the bull trap is about, I'm going to put at the end of this video, Corona Investing. I want you to pay attention to that, please. There's also a great training in there for our subscribers. You're not a subscriber, you don't get the training. It's free. Go to chartingwealth.com, sign up. We see that we have two green up candles. That's the Monday, Tuesday, and the Wednesday, Thursday. So we had that crossover back on the candle representing Monday and Tuesday, ending the 7th. And we had that followed up by a higher high on the next candle. So we do have a two-day crossover. It means we're not looking for a down trade, but we're possibly being set up for one of two things. Either that upward movement's going to rotate the weekly chart over and we'll have a weekly vertical crossover sometime in the future, nearer rather than farther away, or we're going to have a recross going down if the bull trap springs at that time, and we'll have a recross to jump in to short the market with something like SH in your practice trade. That's where we are. As we end the week, we are looking for one of two things. Either a recross over this next week with that two-day candle crossing over. The minute the two-day candle ends, crossing over, going down, it will look like it did back on the 25th of February, and it will move in the same direction as the weekly chart. That is a recross. We would then jump in. If this movement keeps going up and the weekly chart crosses over going up, then it'd be a weekly vertical crossover going up, and you jump into SPY, not the inverse fund. Very similar to where we are on the Nasdaq 100. It too is still negative, but the two-day did cross over the same time that the two-day crossed over on the S&P 500. And we see that derivative oscillator losing downward momentum, price percent oscillator heading up on the weekly chart. We look at the two-day. We had that crossover at the same time on Tuesday the 7th. So the 2 days moving the opposite direction of the weekly. We're going to wait either for a two-day crossover going down or and that's called a recross, or the weekly is at some point going to be dragged up in the same direction as the Qs. Typically what we look to purchase in our practice trade in an inverse is, of course, PSQ. That is the ProShares short. And of course, when the market's going down, as it was the 25th through around the 20th, that's the 25th, we can go all the way back, 25th of February, until things topped out on the 18th of March, that was when the market was going down on the underlying QQQ, the Nasdaq 100. PSQ was consequently going up. So again, it's set up as a short fund to move in the opposite direction of the underlying ETF, which is QQQ. Same thing goes for the S&P 500. Its single opposite is SH. And there's others that move 2 and 3 times, but those are so loaded, they get really complicated. I want you to practice SH or PSQ or a put. And if you've taken our 3-part training in options, great. If you've not, you need to be a subscriber so when we launch it again, you can get it. Sign up at chartingwealth.com. Okay, we're going to go back to the weekly. We're going to move out of stocks to 20-year bonds. Now remember, 20-year bonds crossed over going up on the weekly chart all the way back on January the 31st. And they peaked in their up movement the week ending Friday the 13th of March. So started moving up on the week ending January 31st, peaked on the week ending Friday the 13th of March. Now, what have they done since then? They've really slid sideways. This last week was sort of a slowdown in what we were hoping were going to be continued up movement. Price percent oscillator flat. Derivative oscillator peaked back on the week ending the 6th of March. Did have another high bump up week, but after that, sideways slide. So we see weakening in that up movement, derivative oscillator losing momentum. We go from the weekly to the 2-day. What do we see there? 2-day, we see things again blowing off, losing steam. Hasn't crossed over yet. It might. If that does, it would take us out of a play in bonds. Hasn't happened yet. We'll see what happens over the course of the next week. We'll be watching. Things bounce off that red signal line and bonds really start to gain steam. You might have the equivalent of what we call a recross. When did we see that last occur? It worked well for us, friends. It occurred. Things crossed over going down, then crossed back over going up on March the 24th. Jumping in point somewhere around 161. And of course, over the course of several days, reached a high of 170.11. Not bad. Not bad at all for 4 days of movement. Actually, a little over 3. So, again, pay attention, see if that happens again for you. We look at that 4-hour chart, and of course it crossed over going down back on Monday morning the 6th, and of course has sort of hit the bottom and sliding along. So we'll see what goes on in the course of this next week. If the stock market continues to move up, then of course you can expect bonds typically to move down. If the stock market really starts crashing, bonds may gain that energy. Now, here's what's fascinating. We're going to gold. We had a weekly vertical crossover going up in gold on Thursday at the close of the market. Now, when we look at that, of course, typically our jumping in point is right there at the close of the market. On the day that occurs, it can be then, it can be later. And if you have concerns about jumping in, we'll talk about those, but we're going ahead and initiating the weekly vertical crossover, moving in the same direction as the 2-day chart, which crossed over a few days before. So that weekly vertical crossover has happened in gold. Now, a couple of caveats here. How high has gold gotten? Gold has gotten up to the 159.37. That is the high that we have hit previously. Over the course of this prior week, where did gold go? Hit a high of 159.08, so it's right up there at the high of highs. Where is gold going to go? Is it going to bounce off that 160 mark or so, 159 mark, and move down, or is it going to bust through it? Well, that's the million-dollar question, my friends. Typically, when we have a weekly vertical crossover, it portends strong changes in trend and movement in that direction. We look at the 2-day chart. The 2-day crossover occurred back on Friday, the 3rd of April. So again, nice, strong up movement in gold. The high, 159.08. The prior candle on the 2-day chart, 157.22. So hitting a higher high than we had seen over the last few days. Not a higher high that we've been to, but awfully darn close to it. Now we go, so we see a strong weekly, a strong 2-day. How's the 4-hour looking? Gold up 2.61%. Gold looks nice, up in the morning, and then in the afternoon, reaching about where it had in the morning. Price percent oscillator pulling away. Derivative oscillator about flat, pulling away from the red signal line. So things are looking good. What should you look at with gold as the week starts? If you pulled the trigger on Thursday, jumped in at the close of the market, of course, pay close attention to how gold starts the week, seeing how strong your 2-day and your weekly remain. And if you want to get into gold, watch the markets after idiot hour. That's the first hour when the market makers have a lot of control and authority. See how gold shakes out and then how it looks around 10:30. You can sure glance at your 30-minute chart, see how it is then, and if indeed you want to pull the trigger on a practice trade in gold. If gold is blowing through the 160 mark and moving up strongly, that's a good sign. If it bounces off or doesn't have any energy to move above that 159 to the 160 range, then it sort of failed that test again. So we'll keep our eye on it. Folks, that's where we are as we end the week. We appreciate everybody who's been buying our book lately. Book sales have been good. Thank you so much for buying Charting Your Way to Wealth. That helps support the channel. And, of course, our Patreon supporters, we appreciate you so much. We sent out to you that special training from our live call-in. Please check your emails. If you didn't get it, it went into somehow into your trash, into your bulk mail. Let us know. We'll email it to you again. You can always contact us, cw@chartingwealth.com. Again, if you have not signed up for and are not receiving our daily podcast, our daily video reviews, go to chartingwealth.com. The special trainings are always in there for the subscribers. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.